Hi there, everybody. It's Ifti from Extreme Returns. Thank you for joining me on the series of trying to find out who is the best person to copy trade. Popular investor, they call them on Etoro. Okay, so a very quick background about myself. As you know, chartered management accountant, worked in the corporate world for Mars, Unilever. I was on the fast track management program of Unilever. I've set up multiple successful businesses like car hire, estate agency. I joined Etoro last year, but under the name of Extreme Returns. I've only been trading for a very short time. You can see it's about 3 months now. We're on the 25th of January. This month, year to date, it's just under 8%. And at the moment, I've got 19 copiers. It says 18 there, but here it says 19. I don't know why there's a difference. Now, I'm in the very fortunate position of having every one of my copiers in a profit. So if you do want to get updates from me, why not just copy me for $200? It's only £160. And this is what I do with a lot of the top elites and pro elites. I just copy them for the minimum amount. So I get to know their strategies and what's going on. So far, we have been covering the elites. We've covered Social Investor, Dean Fredericks, Libor Vassor, It Sounds Great, and Do Few Lie. Today, we're going to cover the next one, which is an interesting chap from Malaysia, JIANSWANG. Sounds Chinese background, I may be mistaken. Let's go through his bio very quickly. So he's an actuary. He's had a degree, he's got a degree from LSE, Actuarial Science, member of the Institute of Actuaries. With his expertise and experience in finances, investment strategies, mainly in mid-term investments, which includes adjusting portfolio according to market risk, achieving the optimal risk to reward ratio. Sounds like an actuary. Let's look at his stats. So far, year to date, 9.5%. Last year, 103%, rounded up, 22 the year before. That's some really good numbers there and here. 4,100 odd copiers, 5 million plus in terms of assets under management. So he'd have to be, he couldn't get to pro elite before the end of the year, because I think you need 3 years of stats and 10 million. It's hard to say whether he's got 10 million now or not, but I'm sure he'll get that. Okay, so let's look at his portfolio. He's got, now this chap's very interesting. As far as I can tell, firstly, he has no ETFs. Let me just double check that one. Yep, no ETFs. I've only come across one other elite who hasn't got any ETFs. And he's got a very concentrated portfolio, relatively, 22. That's a number I like, between 15 and 25, as you know. So let's look at some of his companies. I will leave a link below to some of the companies I've covered. If I were to do an in-depth analysis on all one of these, nobody would watch this video. But what I wanted to do is pick up some of them. So let's head across to Stockopedia. It's one of my favorite sites for financial analysis. Anybody who hasn't been on it, please do go on there, because it really is, it will save so much time and it will give you so much in return. Any serious investor will need a means of analyzing stocks. So let's look at this one, Billy. Not one that I've analyzed before. And they are quoted on the New York Stock Exchange. Actually called Billy. 42 billion market cap, 51 quality, 7 value, 91 out of 100 in terms of momentum. Let's see what they do. China-based company, principally engaged in the internet and other related businesses. Company operates in business through 4 segments. Mobile game service segment is primarily operating the exclusively distributed mobile games and jointly operated mobile games developed by third-party game developers. Advertising segment, mainly display advertising, live broadcasting for value-added services, and the other segment mainly engaged in the sales of products through its e-commerce platform. And they're based in Guaozheng, Shanghai. Let's look at their main stats. This is all in Chinese yuan, and they have been growing really, really fast from almost a standing start of 131 million to 17 billion this year. 168% compound annual growth. That is fantastic achievement. However, their net profit, they have spent billions putting this business together. Look at that, 552 million loss in 2018, 1.3 billion in 2019. And it's the losses are more than doubling every year. That's worrying. I know this year they're saying it's going to go down to 1.4 billion. That's not good. And this is worrying as well. Operating margin is minus 28% in 2015, and this year to date, sorry, the last 12 months, minus 26%. Return on capital employed obviously will be all minuses. Free cash flow, they're not really keeping their costs under control. That's the first thing I say about this company. They're not generating enough cash, and they're doing it by spending on capex. If you look at that per share. So on an operating cash flow basis per share, they're profitable, but they're spending all in investing for the future. This is a risky stock. What else can I tell you about them? None of these numbers will make much sense because they're making losses. However, on the momentum side, which is where they're very strong, they have been outperforming the market by a lot. If you look at what they were in Christmas, 82, now they're 135. This stock is really hot. Why is that? Who are the shareholders? Okay. So this is a company backed by Tencent. Now, Tencent are huge. They've got a big shareholding in Bilibili, and they're backed by Alibaba as well. So because these two huge companies have got, I mean, Alibaba's got a fairly small stake, but Tencent's got a huge stake in this company. I think this company is not going to go bust. I don't think Tencent would let it go bust. And I don't think with these kind of shareholders that they're going to be in problems. Let's look at their cash pile. They've got 14 billion yuan in cash, and they're losing, they say this year, 1.4 billion. It's still a speculative play, but I feel a lot more comfortable with it knowing that Alibaba and Tencent are behind it. Okay, let's go back to his portfolio. Tesla and NIO we've covered a number of times, and Meituan I've covered as well. I'll leave links behind, in the description below. BYD Hong Kong, now that's an interesting company. Where is it? I think it's this one. Build Your Dreams. Now, this is an interesting company from a number of different perspectives. Let's take you through it. So, market cap of 65 billion, quality 77, value 6, which means it's under current market conditions, it's quite expensive. Momentum, however, 99. Look at that. It did take a dip. Let's have a look at this in a bit more detail, actually. So back in June, it was only trading at less than 60. Now it's 275. it's increased by more than 4 times, nearly 5 times in the space of 7 months. How much has Mr. Jian made out of it? Only 13%. Why? Has he been selling it off? Let's have a look. No, not really. Well, not recently. He got in too late. Is it too late for us, I wonder? Well, let's take a step back. They are a China-based company, manufacture and sales of transport equipment. The company is also engaged in the manufacture and sales of electronic parts and components and devices for daily use, rechargeable batteries and photovoltaic products, mobile phone parts assembly. Okay, so quite an interesting company from that perspective. Shenzhen, which is a free trade area in China. Total revenue. Now this is a massive company, isn't it? 58 billion yuan in 2014, doubled 2 years later, and increased slowly in 2017, jumped up in 2018, went down in 2019. That's interesting. Why did it go down? Last 12 months, 138, full year estimates 149, this year's estimates 182. So it's a big jump. I don't know if they can hit these numbers. Have they acquired some companies, for example? Have they taken on some big clients? I'd like to know. Let's see if there's anything in the news about why that's happening. Now, the news section isn't as good as I like it to be. They're buying back their own shares, approval of extra shares, plans to spin off semiconductor unit. It's hard to tell. I need more time. But one thing we can say for sure is look at their relative strength. It's just massive. 1 year, they've been outperforming the market by 356%. Now, this is not a bad company to get hold of. Net profit, interestingly enough, is 30.1% compound annual growth rate. It's growing at a faster rate than revenue, which is, I love to see that. Operating margin has been, what is it, minus and 4%, 5%, 5%, 3% is very low. I would, for a manufacturing company of electronic parts, I'd expect it to be much higher. That means that they've probably spent an awful lot on CapEx. Is that right? 3.4. Yeah, they're spending all of their operating cash flow per share on CapEx plus more for the first, well, here 2014, 15, 16, 17, 18, 19. Now they say that in the 12 months, trailing 12 months basis, it's 14.5% versus 5. I don't believe those numbers. I would have to ask that question, why is it nearly tripled in 1 year? And suddenly they become cash flow positive. Maybe because they spun off their semiconductor unit, which case you'd expect revenue to go down, but it's going up significantly. A lot of questions about this company. They're sitting on a big cash pile, 13 billion, and they're cash flow positive as well now. They're paying a dividend, very, very small dividend, but they're still paying a dividend. P ratio 108, which means it really is expensive, but I would ignore the PE ratio and concentrate more on the price to free cash flow. That is the same as the PE ratio, but on a cash basis, not counting. And 23, although it looks cheap, is quite expensive by Chinese standards. So if you look at PE ratios here, it's 21 for the S&P 500, for the FTSE it's 16.7, for the Hong Kong it's 10.5, for Japan it's 16.5. Okay, That's enough about BYD. Let's look at a couple more. Let's look at Pinterest, because this is a company I've been eyeing for a while now to try and get involved in. Quality 70, value 8, momentum 99. So you can see momentum is quite high, although having said that, relative strength in the last month is dipping, as is the 50-day moving average. Let's take a step back. Pinterest is a visual discovery engine. That's a horrible way of describing it, but users can create and manage theme-based image collections and share inspirations for their lives. Based in San Francisco, their revenues have been growing quite spectacularly, 56% compound annual growth rate. Now they're profitable on the accounting basis, and on the free cash flow basis, they're not. In fact, they're getting worse. And this is one thing that confuses an awful lot of people. How can you be showing profits here, but still cash flow? I suppose they haven't updated the 2020 and 21. Maybe that'll show cash flow positive. But it is possible to show a profit, to show a loss here, net profit, to show a loss, however, to be cash flow positive, and vice versa as well. Because cash flow and accounting are two very different things. Sitting on a big cash pile of $1.6 billion. Who owns this company? Is there anybody that we recognize? It's all big, pension funds and so on. Market cap 33. I think this has got a long way to go, although the PE ratio is 122 here, and you can't see it on the cash flow basis because it's negative still. The PEG ratio means anything below 1 is cheap. So it's expensive. Obviously, they're not paying a dividend. Has he made much money from Pinterest, I wonder? Pinterest, where are you? 4%. I'd expect him to be making a lot more. Has he been selling them off recently? Let's have a look. Not in the last month. Why are you not making more money, Mr. Jian? Okay. Let's just do one more. This is one of my favorites because I've added this to my watch list. In fact, my wife, I think, has, I'll check that in a minute. I think she saw me analyzing it and I think she added it to her portfolio, but we'll check that out in just one moment. So PDD is Pinduoduo. Let's start off by describing what they do first. So it's an e-commerce platform operator in China. It's provides value for money merchandise and interactive shopping options. The platform is built to resemble a virtual bazaar of a broad spectrum of products. The platform provides a range of online payment options, and it's based in Shanghai, one of the biggest cities in China. It's quality 63, value 6, momentum 95. PE ratio is at 335. That is huge. But on the cash flow basis, it's only 58. I say only, but it's a lot less than 335. Market cap 150. It's traded in, I think that's Hong Kong. But it's all in Chinese yuan. Okay, so it's growing at an exponential rate, 291%. And it says that they're going to be showing a 3.6 billion profit this year. On a cash flow basis, it's always been positive. So there's an example of free cash flow on a positive basis, but on a net profit basis, it's showing big losses. Look at that, 10 billion, 7 billion, 7.5 billion. Operating margin has been really poor. I mean, there are a few red flags about this company. Why is the cash flow so positive, yet year after year after year, they're showing huge losses? One question. Second question is, how can their operating margin be minus 82%? I've never seen that in any company, in any big company. This is not normal. And they're not spending it all on CapEx. That's tiny. They are sitting on a huge cash pile, which, if it's not debt, no, it's not funded by debt either. Let's have a quick look at their cash flow statement. Sorry, their balance sheet. Now, what I'm looking for is long-term debt, and it's tiny at 5.2 billion. And yeah, I mean, it's saying 51 billion, but that's assets as well and so on. It's this number here, 5.2 billion. I don't understand that. My wife, just to very quickly, because there's so many Asian stocks in Jian's portfolio, my wife has got an account purely of developed Asia. So her name's Adiba. Now she looks at countries like Japan, Hong Kong, China, Singapore, Malaysia, Taiwan, South Korea, India as well. And she's doing really well, 9%. And her portfolio is, there you go, Pete, she did. She did buy after all. We were debating this as a family as to whether I should be adding it to mine. And looks like she's added it to hers. So she's got a lot of those companies. Do consider copying her as well. Let's go back to Mr. Jian. So he's got a very interesting mix, what I'd say is, of big American companies and big Chinese companies. And they're all very well known, big market cap, all in interesting areas at the cutting edge of technology. Now, one thing I'd like to point out that I saw is some of these companies have got what's called a dual listing. So let's take JD, for example. Now, JD.com, this is the Hong Kong listing because you can see the number with HK. So let's have a look at that, 9618. And I'm just going to show you. There we go. So the listing in the Hong Kong market shows a market cap of 106 billion. Quality 94, value 18, momentum 88. Now, this is a company that a lot of people have got. Now, what I haven't seen in any top trader on Etoro is where you're holding both shares, one listed in Hong Kong, in this case, and the one listed in America. So just to show you, well, let's just, before we go to the American one, let's just look at the share price. The share price is 386 Hong Kong dollars. But interestingly enough, what I wanted to see is the relative strength. So if you just remember these numbers, they're minus here, and 6 months, 15%. Now, if you look at the JD, it's very slow today. There we go, New Stock Exchange. Here, the share price is 31%. In the Hong Kong relative strength, it was 15% against the Hong Kong market. And the share price is very different to the share price. The share price in America is very different. Forget the actual number of 94 versus 356. The market cap is the same, but the shares move in a different way. Now, what Mr. Jian has decided to do is buy a very small holding in the New York Stock Exchange version of the listing, a much higher version in the Hong Kong market. Now, because of currency fluctuations and because of liquidity and also all sorts of other issues, the share price will move in a different way. Now you can see here, it's gone up by 11.5% and here by 59%. I mean, I don't know if he bought it at the same time. And to complicate matters, he's been, if you look at his history, he's been, JD, he's been selling them as well recently for, you can see the profits here. So it's not to say that this has grown only 11% versus 59. You can't compare those two numbers because they weren't bought at this, probably not bought at the same time. But what we can say is that the share price is moving a different way. It's almost like two different companies. That's how you have to treat it. Although obviously it is one company with dual listing. Now he's done that with JD, and interestingly enough, I think I saw another one as well. No. Okay, interesting. The other thing I was going to mention is that he's got Tencent Music Entertainment Group, which is a spin-off. Well, let's have a very quick look at it. It's a spin-off of Tencent. So this is just the music side. It's got a 33 billion market cap. I'm not going to go through all the numbers other than to point out a very few things. The share price has increased. You can see here it's 21 only last week, and it's now gone up to 27. So it's going up very, very fast. Now, what I wanted to show you is the shareholders. So what this doesn't show, unfortunately, and I wish it did really, is that it is majority owned by Tencent itself. But it's got people like Bailey Gifford in there, who I've got a lot of respect for. If you just copy Bailey Gifford, then you can't go wrong. In fact, Bailey Gifford, just to divulge a little bit, what am I trying to say? Go off the beaten track a little bit. They run a fund called Scottish Mortgage Investment Trust. It's got nothing to do with Scotland or mortgages. It's just an historical name. But Bailey Gifford run it, and they have got a lot of these companies that Mr. Jian has got in his portfolio. I mean, they're very big on Tesla, for example. So this is actually a very interesting portfolio. I like it for a number of reasons. Some of them I've highlighted. He takes big positions, which I like. He's got the right number of shares, which I like. He's got an interesting mix of dual listings for JD. I'm confused as to why he's not making more money. I know his stats are very good, 9.5% this month so far, 103. Now, don't get me wrong, he's making a lot of money, but I'm confused as to why he isn't making even more. If you saw the share price of Pinterest like we did earlier on, and if I were to show you some of these others, they've gone up a lot more. Maybe he's been selling quite a few off. Anyway, let's get back to it. So when I put all of his companies, let's just show you this way, in terms of quality, value, and momentum, he's got 22. Normally, I only analyze the top 20, but in this case, I'll do 22 because he's only got 22. It's not going to change the stats very much, but just for the sake of completeness. Now, the eagle-eyed some of you will have noticed that some of these numbers have changed, and I do update them on a regular basis because they change every day. In terms of quality, his average is 73. In terms of value, it's 13. In terms of momentum, it's 90. Now, when you compare that to others, I mean, I could do it this way, but why not take you over to the actual list here? Interestingly, let's take it from the returns basis. his returns, let's make it bigger here, that's probably better. 22% last year, 102% this, sorry, in 2020, average of 62. That puts him fourth. Dean Fredericks is far and away ahead in the lead in terms of returns. Then we've got It Sounds Great, then Do Lie, and then we've got Mr. Jian here. In terms of quality, he came out at 73, which is fourth, so he gets 7 points. In terms of value, is that right? Have I made a mistake here? It is only 13. Can that be right? Why is this value so poor? Shopify is at 1, Snap is at 9, Tencent. Oh, he's got rid of, oh, right. He doesn't have Tencent anymore. I think has he sold it in the last 2 days? Oh, here it is, Tencent. Because I did this yesterday. So Tencent is a value of 8. So one thing I'd say is that his portfolio is full of companies with single-digit values. That means they're very overstretched in terms of today's valuation. Now, what that means on a practical basis is that a lot of these companies, when they have their latest earnings report in America, you have to have it every quarter. If these companies do not hit the expectations the market has been led to believe in terms of customer numbers, profitability, cash flow, or whatever metric the analysts are using to analyze these companies, then they will get punished big time. Maybe that's why Mr. Jian's been selling off a lot of these companies. Okay, but one thing I'd say is I'd like to see better value. So I'll put that down as in some of these companies, I mean, he's got reasonable holdings, but too many are at an overstretched valuation by today's marketplace. So better value companies would be one piece of advice I'd give him. However, the flip side to that is the momentum is really good and he's way ahead of everybody else. So he's a good person to copy today, risky in the medium term. Medium terms means when the next analyst reports are out. Okay. Now, one thing I look at is how often does he post, and his feed is quite good. He posted here 2 days ago. He's learning how to do Twitch, and he's doing updates on that, which is good. Posted 3 days ago, posted 4 days ago. And when you go back, he's actually very good at keeping people informed. And also he does reply as well to some of the to many of the comments as well. I mean, look, he's got 93 there. So people are very active on his feed as well, which is something I like to see. So I've given him 3 points there. When it comes to different sectors, you can see from his portfolio that he's got, although a lot of it is tech, I've broken it down because I don't think, although many people see Tesla as a tech company, you can't say that a company like Beyond Your Dreams, although it's a tech company, is in the same kind of category as Tesla. So he's got some a wide variety of different sectors. Although I would like to see, companies in the old sectors, consumer cyclicals and so on. Well, you know, that's his thing, isn't it? So no, why? International. He's got mainly Chinese and American companies. I mean, I think Spotify would be classified as I've classified it as American, although its background is, I think, Scandinavian. It's listed in America. So it's about the matter of the listing. So maybe international as well, I'd like to see. In terms of cash, I've only given him one because he's got no cash holding at all. Now, I think using up all your cash balance is okay for some investment strategies. I like to see between 5 and 10% because you can then quickly pounce on opportunities. And with the type of portfolio he's got, it is higher risk. You've seen that. Higher momentum. It is overvalued. The valuations are stretched. The share prices with PE ratios and so on, especially even on the cash basis, are very high. Not all the companies are making profits. So it is a risky portfolio. So I'd like to see some cash in there. So I've given him 1 point there. The number of companies, he's got bang on the right number of companies. I like that. Between 15 and 25 is the ideal number. If you have too few, it's concentrated and too risky. If you have too many, it dilutes the returns. And where are the profits coming from? I like to see the profits coming from the largest positions. So the largest position is Tesla, Bilibili, and NIO. But the profits are coming from, oh, actually, PDD, Tesla, and JD. He gets 1 point because Tesla is one of his biggest positions. Having said that, most of his positions are fairly decent. For many of the top investors, we see piddly amounts like 0.5%, 1%, and so on. Here, we don't see any of that. He really does like to have, big positions. Where are the losses coming from? So what you want to see is the losses coming from the smallest positions. So he's got JD, the US version, Tencent, and Peloton as his smallest positions, and his losses are coming from Spotify, Peloton, and Pinterest. So Peloton is one of his smallest positions, so he'd get 1 point for that. So he'd end up with 40 points. That actually puts him ahead of these guys. So he would end up, let me just clear this up for you, second behind Dean Fendricks. And Dufali and Libor Vassar would drop down a point place. So my advice would be more cash, more international, and better value companies. Although those are minor points really, and I think I should say minor points here. I actually like this portfolio. I think he's going to do well. It's going to be a higher risk than most. What's his risk level? It says 5. I think that is going to go up. But I like this. Look, the drawdown's fairly reasonable as well on daily, weekly, yearly basis. I like this portfolio a lot. And not surprisingly, it has done, it comes up at number 2. Oops. There we go. 43, 40, 39, 39, 38, 36. So is anybody going to beat Dean Fendricks? I don't know yet. Stay tuned and you'll find out. Just before we go, I'd like to give a good quick plug to my eldest son. He's a doctor. He's working in one of the local hospitals battling against COVID patients, or working for dealing with COVID patients. So he wants to make the world a better place. So he looks at green stocks. He's defined them there. His stats are very good, 13%. Do consider copying him. He's already got 5 copiers. He'd like to get it a bit more. I said I'd help him out. And my second son is doing only FX and cryptos. He's doing reasonably well as well. And there's a little competition between the brothers about copiers. He is slightly ahead. And my third son is also, he's a medic, studying in Bulgaria. And he says he just wants to do better than the banks. So very low risk. He thinks he can get the risk level down. It's 3 at the moment, but I think it was 2 actually. Yeah. So it is, say, 2 average risk for January. I don't know why they put for the last 7 days. It'll come down. He wants to get it down to 1. And he wants to beat Olivier Danval, and he thinks he's better than banks, which is not that hard to do. So please do consider copying them as well. So this is IFTY. I am very grateful that you've tuned in. Do spread the word. Copy, subscribe, like, and see you guys very, very soon.